I'm Mark Gagan and you're listening to the Voice of Insurance podcast, produced in association with Advantage Go, enabling an enterprise view of exposure. Today's podcast is with the CEO of a reinsurer that wrote just under $8 billion of gross premiums in 2025. Miguel Rosa runs Mapfre Re, a global top 20 reinsurer with a reputation for long-term strategic thinking and consistency in an often unstable market. As the reinsurance market softens, at a significantly faster rate than many reinsurers were expecting, it's fascinating to hear Miguel's view on the prospects for profitable growth in 2026 and beyond. With 2 decades of reinsurance experience, topped off with 3 years in motor insurance, Miguel brings an exceptionally well-rounded perspective to his role. In this podcast, we look at the dynamics affecting the reinsurance market and the growth opportunities remaining within it, but we also broaden the discussion out to include more specific themes such as the opportunity in MGAs and AI, both as an aid to operational efficiency and more skillful underwriting, but also as an emerging peril in and of itself. Miguel is great company, and the time will pass by extremely quickly. I learned a lot, and I think you will too. Enjoy the podcast.
Miguel, welcome to the Voice of Insurance.
Thank you very much, Mark. It's a pleasure being with you here today.
We met before in September at Monte Carlo. Quite a lot's changed since then, but we're going to talk about that in a minute. But for the benefit of anyone who's listening who doesn't know you, because you haven't been in the post for that long, could you briefly introduce yourself to the audience and run us through your career to date and how you got into this position now, and maybe tell us how you got into insurance in the first place?
Yes, of course. Just to start, I'm Miguel Rosa. I'm the CEO of Mapfre Re. All my professional career has been with the group, so nearly 25 years already. I have to say that I started in insurance because my dad was as well in the industry, working here in Spain. And in the end, I decided to study business administration and insurance degree.
Was your father also in Mapfre?
No, not in Mapfre. He worked for different companies and always on the commercial side, but here locally in Spain. Nothing to do with reinsurance.
Oh, right. Okay. So more like an agent.
Correct.
Well, when you go into every town in Spain, there's always the Mapfre office, of course, and there may be a few other ones, maybe a Generali one, maybe a Zurich one, but there's always the Mapfre one. I always look out for the Mapfre one particularly. But you have that system of tied agents in every town pretty much, don't you? Was he one of those?
Correct. Yeah, but he was not working for Mapfre.
No. Okay.
For different companies, but I mean, insurance was always part of our daily life. Let's put it this way.
And how did you get into the high-end part of insurance, the reinsurance part, and when did you start working in Mapfre Re?
So when I went to university, Mapfre was involved in this degree. So in fact, one of my reinsurance teachers asked me to join the company. So I decided to do it. So yeah, that was, as I mentioned, close to 25 years ago. I started as an underwriter, being part of the Mapfre Group business. So dealing with all the different Mapfre insurance companies across the world and buying reinsurance as well. So I was there for a number of years. And then I started moving to what we call the non-group. So with our external market, let's put it this way. And after different roles, I ended being the non-life chief underwriting officer. Then I moved to the global chief underwriting officer, including treaties, facultative, life, non-life. And by the end of 2020, I'm Mapfre Re, and I moved within the group to run the motor insurance company in Germany.
Wow.
I always joke about this, but after being the chief underwriting officer for 5-6 years, I missed the hard market. And I moved to deal with motor business in Germany, Verti, which is our digital brand in Mapfre. And I spent 3 years there. That was a really good experience. And to be honest, being on the other side helps you a lot once you are back in reinsurance to understand your client needs. And then since January 24, I have the privilege of running Mapfre Re again as the CEO.
Yes, it certainly seems to be a feature of the Mapfre Group that you do rotate quite a bit. You get some experience in different places and different parts of the organization, it seems. Must be really interesting. I don't know how you go from reinsurance to something incredibly competitive and high policy count, low premium individual policy. It must be the complete opposite of reinsurance in many ways, and digital as well, so even more. It must be amazing. I mean, and hyper competitive. Those kind of markets, they don't really seem to ever have a hard market or a soft market. They just have a competitive market all the time.
Yeah, you are right. And it's true that at the beginning it's a kind of a shock because when you are in reinsurance and when you have worldwide responsibilities and looking after the different lines of business, at the beginning you think, well, now I'm going to focus just in brackets, in motor business in one country. But it's true, as you mentioned, the complexity and the type of job is totally different. But in the end, you are under the umbrella of Mapfre, and it's a great experience. And I think this is something that we promote quite a lot internally. And that's why you will find a lot of people in the company working for a lot of years. Yeah.
Must give you a lot more empathy when you're meeting a big motor underwriter who, you're writing perhaps, their motor treaty with the high excess. It must give you a lot of empathy. You know exactly how they feel and how this probably isn't their biggest priority. The biggest priority is probably, keeping the cost of repairs down or that kind of thing.
Yeah, absolutely. The day by day in an insurance company, in a motor insurance company, is totally different from our normal life in reinsurance business. But as I mentioned, extremely interesting, and it was a fantastic experience.
So you've been running Mapfre for
Mapfre Re, 2 years, more than 2 years.
2 years already. Goodness.
Yeah, 25 months. Yeah.
What's your main aim in terms of the perception of Mapfre Re? What do you want those reinsurance brokers to be thinking of when someone mentions Mapfre Re to them?
So, there is one special point that I would like to mention now. That is our new brand identity that probably you've seen it.
So you've got new logos everywhere.
Yeah, new logos. And now we don't have the Mapfre Re in capital letters and the color is a bit different. And we are very excited about this because it's not just a new logo or a new way of writing the brand, but it's showing to the industry, to everyone, that we've been doing things in a different way. We've been improving quite a lot, but always granting the past of the company. So we are very excited about this.
With a business that's global, it's a huge operation. You keep seeing the old logo somewhere, and then you have to change it on the letterhead everywhere. And there are so many different websites and pages, and these things are enormous undertakings, aren't they? It takes a lot of work.
A lot of work. In fact, the team has been doing an amazing job and working hard. Has been, as you can imagine, a huge project. So working long hours, but in the end, everything went extremely well. So we are very proud of that. Answering to your question, the way I think the market sees Mapfre Re is a kind of a professional reinsurer. In the end, probably our business model is a little bit unique because you know that we have this double role, that on the one side, we handle all the reinsurance needs for the group. And this is a totally different department from our role in the open external market. I would say that we are very long-term driven. We are very client-oriented. We are a technical reinsurer, but at the same time, I think we are flexible. And there is an important point as well. We are fast in our decision-making process, right? The way we are organized, I think, is pretty efficient. So in the end, we are able to give a solution to our clients and brokers in a proper way.
And in terms of that balance, as you're looking at the balance, if I looked at the numbers rightly, it was probably 20% is the internal reinsurance vehicle for the group and 80% third party. Obviously, you've been growing, so I presume it will continue to grow, or I suppose, will the third party portion grow faster than the reinsurance of Mapfre itself?
Yeah, this is a very good question because in the end, the goals that we have are totally different. Because in the end, what we try to do is to optimize capital for the group, to give tools to all the insurance operations to compete in the markets, to control the security, to negotiate properly, to build strong relationships with brokers, with reinsurers. So in the end, we act as a kind of reinsurance department for Mapfre. So in the end here, we don't have clear goals to grow. So perhaps there is a specific need of a big quota share with some of our companies, and then we will see a growth in terms of premiums, and perhaps then the need disappear and you see a decrease. So in the end, what we have to do here is to produce the normal returns for the cost of capital that we allocate to that risk that we take. Important to be mentioned here that we don't charge overriders or things like that. The remuneration that we get to pay for this cost of capital is just for the business that we retain. I think you are familiar with the model, but in the end, what we do is to write 100% share in each and every treaty coming from all the different insurance operations worldwide. We get everything here in Mapfre Re, and from here, we set the retro.
Yeah.
So sometimes we combine different countries or sometimes different lines of business, or in other cases, is straightforward retro. And the goals that we have on the third-party business are totally different, as you can imagine. And here, of course, we have our growth plans and profitability and all the different KPIs that you can imagine. It's important to understand that there is a specific team dealing with the group reinsurance, okay? And then most of the organization is doing the third-party business.
So with that, you're not really retaining much of that. A lot of it is washing straight through your balance sheet in many ways. Is that right? Or would you plan on retaining more of that group? Because it's a fantastic right, because it's so diversified.
Yeah, it's a great diversification because in the end, we have a fantastic client.
Yeah.
That is the business that we get from Mapfre. But it's important to, first of all, to protect our balance sheet. And there is a lot of catastrophe exposure coming from Latin America, from the US, and from countries with heavy cat exposures. And then on the other side, you need to keep the balance with the business that you retain and the business that you share with our partners, with reinsurers in the open market.
But I suppose it's always good to know that there's that optionality there to have a very solid part of the book is there.
It gives you a lot of flexibility because in the end, we are a professional reinsurer that operate across the world. So in the end, we are able to do this kind of internal benchmark between what's going on in the market and what conditions we are giving the Mapfre companies, but always with this, if you allow me, with this clear Chinese wall, of course, of not sharing the terms that we have with our clients.
So since we last spoke, of course, the reinsurance market has renewed and it's softened measurably. The notable commentary from all those broker reports and all the interviews I've done since 1/1 would be to say perhaps the reinsurers gave 2 years worth of softening in one go, which slightly surprised some people. Of course, we're coming from a very good place. How is this affecting the strategy? It has surprised some people, the rate at which we've given back price.
Yeah, I have to say that the softening of the market was not a surprise for us at Mapfre Re. What probably was a little bit of surprise was the degree of the decrease, right? So probably we were expecting to see a kind of a single-digit reduction overall. And as you mentioned, what we've been seeing in all the different brokers and reports, it was more in the range of between 10 and 15, and depending on the market, depending on the programs and so on. But I think there are a couple of points that I would like to highlight here. First of all, probably the market focused on the price reduction, right? More than changes in conditions, exclusions, changes in the structures, which in the end, I think with my underwriting background is more important than the price as such. As I was mentioning before with my professional career, after 18 years in Mapfre Re, I missed the hard market, the real hard market. So what I'm trying to say is that in reinsurance business, the market usually is soft and you only see a real hard market in specific cases. So I think this is something that we need to live with. In the end, we know how to navigate soft markets, and this is the message that we were sending to our teams. And in the end, for us, it's much more important to understand the quality of the underlying portfolio that you are writing, the strategy of your client. As we mentioned before, we are very long-term, always oriented, right, with our clients. And of course, when you see prices decreasing significantly, you need to be aware and you need to monitor the trend, because we know that risks are still there and the secondary perils are still there and the climate change and everything that we know. So I think it's important to monitor the trend and to get the adequate remuneration for the volatility that you get. But all in all, answering to your question, this is not changing our strategy.
Yes, and I think we've discussed with you and all your predecessors, it's always been a very consistent message from Mapfre Re that you really value that continuity. You're probably also not the buyer of reinsurance to ever push for the biggest reduction when the market is really soft. And also you don't push for the highest increases either. You tend to be less volatile in that sense.
Yeah.
But when the market itself is volatile, does it make it harder to keep that continuity because it just creates instability? Does it make you feel a little bit of discomfort when it moves too fast, faster than you're expecting?
Yes and no, because in the end, when we talk about prices and we talk about reinsurance, we tend to focus always on Cat Excel. But reinsurance is much more than this. And this is in the end what we've been trying to do, to write the client rather than writing specific treaties. And of course, Cat Excel is a significant part of our portfolio, but we do write, as you know, most of lines of business. I mean, apart from US casualty, that this is a kind of our red line that we have in our underwriting guidelines. We are a global reinsurer. So in the end, we try to balance this volatility coming from the pure cat business with other lines of business and other opportunities.
I suppose when you have a lot more proportional business of bouquets and that kind of relationship with a cedant, I suppose it's just inherently less unstable.
I mean, of course, there is volatility as well, because you see as well a softening market sometimes in primary, in the insurance markets, and you see movements in commissions and so on. But yeah, it's more stable than the pure Cat Excel business.
As you alluded to before, this was a softening that was kind of predictable because, of course, capacity had increased. Everyone had made lots of profit. A lot of people had retained that profit and were happy to redeploy that new capital into the marketplace. And therefore, I suppose when we were speaking at Monte Carlo, there was almost that acceptance that in order to do that, we probably would have to give some price. And I suppose the surprise has been that it was more price than we thought. But in terms of demand, sometimes obviously a reduction in price can stimulate demand and say, well, great, well, at these prices, maybe I will buy more, I'll buy a new top layer or whatever, or cede more. Are you seeing that? Are you seeing that the demand is holding up? Some of the commentary has been that actually most of the cedants, instead of buying more, they took that saving and said, great, I'm going to take that saving because I need it.
Yeah, I think it's different from one client to the other, but I would say that overall, the market focused on pricing savings. But it's true that some other clients took advantage of this and decided to buy more on top, a kind of a top layer and so on.
Yeah.
What we didn't see is a kind of different structures in the lower part of the programs and more aggregate covers or frequency and so on. This is something that we didn't see in the market. And perhaps if this trend continues, we will see what happens because the year is very long. And as you may remember, 25 started in January with the wildfires in California, which was a significant loss. And in the end, the rest of the year, although we saw significant cat activity in terms of insured losses, was not that relevant. So I think it's important here to be prudent. But I think the market focused overall more on savings rather than buying more.
And where do you think we are in terms of overall price adequacy now that we've come through this renewal? Most people seem to be still fairly happy, but of course, the direction of travel is downwards.
Yeah, we are comfortable with the current levels of prices. But again, you need to monitor this degree of decreases, because when you see in that one program prices going down by 15, of course, this is not something that you can maintain in the future, the similar trend, right? So I would say that we are okay. And when you monitor the level of prices in our own portfolio and the public information coming from some brokers in a kind of a number of years, I think the level of prices is still okay. But I insist, for us, structures and conditions, including exclusions, is something that is very relevant, and we didn't see relevant changes in the last renewal.
And where are you seeing the best opportunities for profitable growth in the marketplace at the moment? The world is still turning. There are lots of opportunities. Economy is growing around the world.
So yeah, you are right that there are a lot of opportunities, and this is always good. And in fact, we were discussing about this as well in Monte Carlo, but last year, back in March, we did a significant restructuring of our senior management and the structure of the teams with a kind of 5-tier focus. Let me summarize that because it explains very well the strategy and where we want to focus in the future. So first of all, we will put even more focused on clients and brokers. And now we have a general manager with a clear goal of strengthening these relationships. Second point, we are being even more prudent. I mentioned even more focused on clients, and we will be even more prudent in the business that we have in our portfolio. with our chief underwriting officer. Then third, there is a very important point. For the first time, we created a vertical unit to develop life, accident, and health business, which we think can balance quite a lot the volatility, as we were discussing, coming from the pure cat business. So will help us to grow, first of all, and to avoid volatility as well. And then two more points. One is technology. Technology is playing a significant role, not only in Mapfre Re, but in the Mapfre Group. And then we have a brand new area where we are very excited about the capabilities and the development that is putting together under the same head strategy, communication, innovation, and sustainability. So in the end, we think that all of these areas are very linked together. So with this restructuring, where we are seeing opportunities in our portfolio, at least, is first of all in the US. We have a very consolidated portfolio. We've been doing business in the US, not doing long-term business, only property business, basically. And we think we can continue growing, and we have the confidence of brokers and clients. Then APAC. APAC is one of the areas where we think we can continue growing the portfolio. In fact, we are about to get the license for our new office in India. So the platform for APAC is going to be pretty strong, I would say, because we have an office in Tokyo, Beijing, Manila, Singapore, Labuan, and now India. So, I mean, with 6 different offices in combination with the headquarters, I think we have a lot of opportunities to develop there. And then Latin America. I mean, we've been there forever. We speak the same language. We have a nice portfolio, but we are convinced that we can do more. And then by line of business, I would highlight life and structured deals. This is something that probably you are aware, but all of these tailor-made solutions or capital relief or other motivations, I think with reinsurance is a product that can be very flexible and very valuable for our clients.
Wow. So there's a lot going on there. So what about, things like innovative classes? You mentioned about sustainability. Again, a huge amount of investment in the renewable energy world. I mean, all sorts of things that perhaps aren't so sustainable. Of course, things like the data centers. I've been doing a lot of talking about these enormous data center projects, but of course, they tend to come hand in hand with an energy project to help power them. And that tends to be a sustainable energy product. They have a solar farm or a wind farm next door to power all the computers that they need, mostly to do with technology. Is it hard to know where to start? Is that a part of growth there for you?
So, I mean, starting by data centers is something that we are monitoring closely because, I mean, the capacity needed is so huge.
We're talking about $25 billion total insured values. And for some of those things, you can probably get a PML to make some sense of 20% if you have lots of firewalls. But of course, for something like a hailstorm or a windstorm, it's 100% PML, isn't it? I don't think you can separate these because they're just big warehouses with computers inside them that, they're not inside a mountain or anything. So again, there's exposure there and it has to be dealt with, doesn't it?
There is exposure there, which is always good news because this means that there will be opportunities to insure and reinsure new risks. But having said this, is something that we are monitoring closely. First of all, identifying the risks that we may have in our portfolio already in the normal treaties that we are writing. And secondly, we will define a strategy at a group level, not only for Mapfre Re, but with other different units within the group to see how we can address and how we can deploy capacity to cover these risks. But I mean, with this sum insureds, it's not an easy one.
But it's an opportunity for everybody, isn't it? Ultimately, it sounds like every insurer and every reinsurer is going to have to write their share. And presumes also that you will have an opportunity to set the price because it's not going to be a risk where a broker can set the price because it's where the market is going to have to set the price.
Yeah, no doubt. And the complexity of the risks is pretty strong. But I mean, there will be opportunities both on the construction side, first of all, and then on the pure property insurance.
Talking about technology, you mentioned it earlier, technology being a big part of the Mapfre Group. We've all been talking about AI for the last 2 years.
Yes.
What have you been using it for and where have you been finding the most success within the reinsurance value chain?
I would say that probably this is one of the best examples of the value and the collaboration between Mapfre Re and the Mapfre Group. Because in the end, here what we have is a kind of a global AI center, which in the end is giving support to all the different units. Because in the end, with something so relevant for us. Wouldn't make any sense to do this separately, right? The way we are seeing this is with a double opportunity, and perhaps I'm going to give you some information about the group, not only Mapfre Re, but this double opportunity is on the one side to enhance the customer experience and the operational efficiency. This is clear. But on the other side, what we are trying to do more on the insurance side is to have this omni-channel approach. So for those clients that really prefer to have the personal touch, we will be there. And for the ones that perhaps wants to or prefer to have a kind of a more virtual relationship, this is something that we can develop. But it's true that there are some risks around artificial intelligence as well. So that's why in Mapfre, and I think probably we were the first company in Spain creating a specific AI manifesto, trying to set properly and very clearly the different principles about AI in the company. There are 5. So for us, artificial intelligence will always be hybrid. Okay, so in the end, this will be a combination between human intelligence and artificial intelligence. Secondly, responsible and well-governed, key. Third, ethical, transparent, and secure. Fourth, we will focus on empowering people, not replacing them. And last but not least, aligned with social and environmental sustainability. So in the end, for us, AI is part of our day by day, I would say. I could give you like 1,000 examples about what we are doing on the insurance side, but let me focus here on reinsurance. And what I would say here, we are working more on efficiency, and AI is helping us in Mapfre Re to work and to improve all the unstructured data that we get as reinsurers. So to put this on a more structured way. So it will help us to be more efficient and to have better data.
And so are you seeing some real results there in terms of productivity? For example, the amount of time it takes an underwriter to respond to a request to quote with the usual big bundle of information?
Yeah, I mean, this is helping us a lot. Our technology has been for many years very strong. And now, in fact, we are in a process of improving and changing our systems. So we always had the options, the capabilities of navigating in our system from portfolio to accounting, to claims, to NatCat, so everything related. So what I'm trying to say is that in the end, data has always been very important for us. Now, answering to your question, probably yes, probably we are faster now because the way we are coding our treaties into the system with some solutions that we have in place already are helping us to be faster in the way we treat all of this information that in the end is giving benefit to clients and brokers.
And so you can grow in a more productive way, that you could grow the premium and the amount of contracts that you're writing, the amount of customers that you're servicing without necessarily growing the headcount at the same rate.
And for us, this is important. This is a key point. In the end, I would say, and not only in reinsurance, but also in insurance, keeping your expense ratio, your internal expense ratio very competitive, in the end will help you, right? You can use this advantage to grow and to be a little bit more aggressive if you wanted to, or to give better returns, right? And to have a higher profitability. But keeping your internal expense ratio on a low level, I think is always a competitive advantage in the market and for the clients.
Now we're talking about AI. What are you thinking about AI from a risk perspective as a reinsurer? Obviously, within casualty classes is where it's most likely to be manifest. At the moment, it's a silent issue, like many things that stay silent until suddenly they can't be silent anymore. As an industry, I've heard the first kind of mentions of naming of AI as a peril or excluding AI, or the process often is to exclude it from the standard contract and then write it back in a new contract and start to name it and start to turn it into a new class of business. But of course, for the vast majority of contracts, it's currently a silent thing. And so therefore implicitly included, because it's not excluded. It's just, if you're writing a law firm, and we know, I'm sure the law firms are all using AI, and, and something goes wrong, it's just part of their errors and omissions, as it is at the moment, because it's their responsibility to check their work. And if their work is not good, then it's not good. Or an auditor, or all sorts of businesses, of course, particularly professional businesses. What's your view on that at the moment? Or is it too early to tell? Where do you think the industry is likely to go on this question?
It's a very interesting question. but I have to say that I don't have the answer.
So it's like the Y2K. If we were talking about Y2K in 1996.
Yeah. This is just a thought, but probably we will see something similar to cyber risks.
Yeah.
Right? That at the beginning is true that we had the silent cyber, both in property and in casualty business. Then it was a kind of a process, and it was a number of years defining specific exclusions. And in the end, there was a new line of business coming to the market. With AI, not sure if this will be a specific line of business, but it's true that we will have to start trying to monitor what's going on. What is clear is that now, when you are in discussions with brokers and clients, this is something that is part of the conversation, right? So it looks like there will be some movement. So far, we haven't seen a lot of specific wordings or exclusions related to this. But yeah, probably this is something that we will see in the future.
And not being a writer at all of US casualty, or obviously some incidental US casualty, we will have that. But I suppose we can almost be certain that we know that this is going to manifest first in the US, just with the way that the US casualty market works and the way that the US plaintiff bar works. It's likely to surface there. That the first test cases and claims around AI-related liabilities are going to be there. But we'll have to wait and see, I suppose.
I mean, probably it will be like that. But yeah, as you are saying, we'll have to monitor and see.
Yeah. It's so embedded in everything, and everyone's trying to embed it into their business flows, that it might be difficult to kind of then separate yourself from it. If we're all using it all the time, then it would be a difficult thing.
Yeah. But I think overall, at least the way we see it in Mapfre, we need to see AI as a kind of an opportunity. Everything that we are doing right now in different areas, in motor business, in health, or customer service, for efficiency. I mean, there are a number of use cases right now that are a kind of a reality in our day by day. So yeah, I think if you do this properly, I see it more as a kind of an opportunity rather than as a risk.
Something I've asked you about before, asked Mapfre Re over the years about, is a lot of reinsurers have, over the last 5 years, 6 years particularly, where we've seen this very strong growth in MGAs, in distribution, and MGAs taking a larger portion of the insurance value chain, particularly insurance, and a lot of that growth being supported by reinsurers, that the capital being provided, the paper being provided to those MGAs via reinsurers, often via some hybrid relationships and different things, but fairly directly by reinsurers. What has been your view of that phenomenon? Are you participating in it? And are you also seeing that as another engine of growth?
Well, first of all, remember that we are a long-term player, so that we don't know, or we don't like to be opportunistic with business. Yeah. But yeah, I mean, this is a reality, and there is business coming from MGAs. We are writing some of them. We do have relationships with MGAs, and in our portfolio it's not very relevant, but it's something that we are monitoring, and it's not something that we are against.
Yeah.
No. And in fact, some of them are extremely interesting, and we see this as a kind of line to be developed in the future. Again, with exactly the same approach that we have with insurance clients. But MGAs, yeah, is something that we are doing.
I suppose the first point is, perhaps if it was 30 years ago, we would see a growth and then a recession and then a growth and a kind of cyclical nature to some of this. This now seems to be a secular change in some of the way that insurance is distributed in certain classes and certain territories. And therefore, it's something to consider, I suppose, that it doesn't look like it's going to go away.
Yeah, again, as long as we see a clear business plan, a kind of stability in the future, and not just something, because there is a window to write this kind of business for a couple of years and then to run away. So that is probably something that we wouldn't support. But this kind of MGAs that are doing the underwriting properly, that they have the IT capabilities to do so, that they have the tools, that you can create this kind of close relationship that we like to have with clients, yeah, is something that we will always support.
And certainly some of them are getting to that sort of scale where they're a virtual insurance company. Of course, they often have their own captive insurance or reinsurance vehicle as well. So you know that they're participating quite significantly in the risk. And of course, they have excellent systems. And of course, the sort of scale, which is now measured in billions of dollars, not just a few million. So it suddenly becomes, they're bigger than some of the cedents that you have relationships with.
Yeah, absolutely.
One other thing, obviously in the last few years, well, it's been quite a long period now that we've had a certain amount of volatility in the reinsurance broking space, new entrants and all sorts of things, and another very significant new entrant now arriving.
Mm-hmm.
How's it been for you? Again, you value that stability. So I don't know, has it been a net negative or net positive for you? How has it been as a reinsurer to navigate those new relationships and perhaps people who are working at one place now popping up at a new place and saying, hey, come on, let's continue that relationship. And of course, the old place saying, no, stop doing that. Don't talk to him anymore. How's it been from your perspective, particularly that conservative perspective that you have, that you like that stability, and there's another form of instability which has not been of your making?
Well, I think brokers has been playing a significant role for years in the reinsurance industry. We do have strong relationships with brokers, both as buyers, and they are bringing a lot of capabilities and analytics and advice. And we are fairly stable in the relationships that we have with the firms, with the individuals as well. But I mean, our relationship is with the firm. Then, as you said, sometimes they move from one broker to the other, but for us, at least the way we see it is to maintain the relationship between companies, right? And then, of course, as business producers, brokers are very relevant in a lot of markets where we operate. It's true that we have local offices in many countries, and we do have direct business with our clients. But I mean, keeping the relationships with the brokers and defining a clear strategy and understanding your strategy and the opportunities that they can bring, I think is important. But yeah, for us, this is part of the reality of the reinsurance market. And I insist, there are brokers extremely professional that adding a lot of value to the industry.
And I suppose if there were three really big ones and now there's more competition between those brokers, I suppose ultimately that's a good thing because they have a great imperative to innovate, to be looking for new solutions, bringing new ideas, because they have to differentiate themselves. Anyone trying to break into this market has to come with something extra, some added value. So presumably you welcome that side effect of that.
This is an important point as well, because buyers, putting Mapfre Re as an example, dealing with the group business and buying reinsurance, you need the broker to add and to create value for the company, right? Because in the end, again, in brackets, to place the program, you don't really need today a broker.
Because I suppose the value is not really in the access to the market or the transaction anymore. It's going to be in the intellectual.
Correct, because we do have the relationships with all different reinsurers and carriers. So in the end, you expect from the brokers much more than that. And in the end, at least with us, with Mapfre, is something that brokers are delivering a very good service.
So ultimately, that increased competition amongst them is only a good thing.
Yeah, I don't see a negative part on that.
It's healthy. Miguel, I think I've come to the end of all my questions. I've really enjoyed catching up with you. Thanks so much for giving me all this time, valuable time. And I hope the market's still prosperous and good for you for the rest of the year. And for your sake, I suppose let's hope that the rate of softening slows down a little bit. But who knows? We'll still be here. It's one of those things I think we know with Mapfre, you'll still be here, whatever happens.
For sure, we will be here and our clients and brokers can count on Mapfre Re for the long run. Mark, has been a pleasure and I hope I can see you soon.
Excellent. Thank you so much.
Thank you. Take care.
Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this program. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry. The Voice of Insurance is produced in association with Advantage Go. Release your underwriters to underwrite with Advantage Go's underwriting platform. Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.